Hey, welcome to Web3 Weekly with your host, Blockstar Technology.
Let's go. All right. Hey, everyone. All the social platforms, all the nations. Today is going to be an interesting one. Today we have Harris joining us to talk about everything what we love in our space, which is finance, taxes, and how does it impact. You will have some few conversations around this subject, and if you have anything, please drop us a message as well, because I'm pretty sure a lot of people could resonate with this one, because this is not like super technical in the sense of like all the technical sort of things. I think this is more like for everyone who bought crypto and and the tax time, and what does it look like for you as an individual or even as a business.
Yeah.
Okay, so that's what we're going to talk about today. So today I've been joined by our ops manager, beautiful Charlie,
Hey guys.
and Harris. So Harris, if you can give a little bit of description about who you are, what you do, and what's your company as well. Right, that would be awesome.
Excellent. Well, thanks, Cozzy and Charlie, for having me on. So I'm a tax lawyer. Unsurprisingly, I run a tax law firm called Cadena Legal, and we specialize in crypto tax issues, whether they're businesses, whether they're individuals, whether they're DAOs in foreign tropical countries. I do want to thank you both for having me on, but also I want to thank you, Cozzy, for putting tax and interesting in the same sentence. In this part of the year, it is, and the rest of it, nobody cares. So this is kind of my red carpet moment where I get to come out and talk about this stuff.
No, awesome. And again, like I think it's like people know that they had to, the tax. Is it the only two truths in the world, right? Tax and debt, isn't it?
That's right. Death, taxes, death.
Yeah. So given that's what we are, and I have to say, like, when we are growing up, right, we never had the financial education, right? Even though this we know that we had to pay tax, we had to look at how to manage finances. We never had that education. I have to say I got a lot more educated as a grown up after I started dealing with crypto, to be honest.
Yeah, well, I'd say same for me as well. Like school didn't teach me nothing about business or taxes or finances, nothing like that. I guess I learned it from a mentor I had who I worked for, and how he ran his business and how he had that structure set up and the reasons why he done that. And that's where I learned hands on. And then coming into the world of crypto, and it just it's like the meme where they've got the teapot and it's got like
Yes.
8 funnels of economics, finance, inflation, like decentralization. It's sort of like all in one once you go down that rabbit hole.
Yeah. I mean, that's it, right? And if we are in this space, if you are having those challenges, and I'm pretty sure like everyone else out there, like having those challenges as well. So Harry, so if you start from a non-crypto, and then we can go to the crypto side afterwards. So more like as a retail investor or a trader, if I you people just go on to some of these exchanges, whether they are our domestic exchanges like SwiftX or Independent Reserve or one of those, or you might go to something like Bittrex or Bitfinex. I think Bitfinex is like winding down now, or FTX, which used to. And when it comes to the tax time, is there any difference on, I bought my crypto in the US or I bought my crypto in Australia? Is there any difference when it comes to the tax time?
Generally, no. So how our tax system works is if you're a tax resident in Australia, you pay tax on all your stuff, no matter if it's in Mexico, the US, the EU, a tropical country. It's not the location of where it is that is in any way relevant. And even if you weren't an Australian tax resident, you pay tax in Australia on your Australian sourced stuff. Most people who are Australians listening to this would be tax residents, and tax residency isn't like citizenship. You can't just fly over to Dubai, sell it and come back. And I have a client say, that's what I'm going to do. And I break the news to them, but that doesn't really work. Taking a 2-4 week holiday, even a 6-month holiday in Dubai isn't going to get rid of your Aussie tax residency. And even if it does, it's got a whole range of other implications. So it doesn't matter where it is in the world, you should report it. And I like to bring people's attention to this wonderful blockchain that we've got. And it's this immutable record of everything you've ever done. And your only protection is that it's quite hard for someone without the tools to link your wallet to you. But as time goes on, either you'll make a mistake, or a centralized exchange or entity will report you, or data matching will get you, or just general user error. And once that's done, if you're relying on that to not report stuff, you're going to be in for a bad time when the ATO can see for the last 10 years you've made all these gains on whatever bizarre meme token that we're investing in at the time.
I mean, that's like so true. Even like we are in the crypto forensic space. We know that we have come across few cases like where people do, like we call it the peel chaining or whatever, and they just do or chain hopping and things like that to cover that. They think like if I hop like 10 different wallets and do a trade, no one can trace me. I think probably that is true when it comes to when the IP addresses, like if you're hopping to IP addresses to connect to like hacking a computer, maybe that could be true because you time out. But on the blockchain, you can't use the same technology, because on the blockchain, every transaction gets pretty much logged, and and like you said, you only need one transaction to be done using a centralized exchange, and straight away you can link the whole history back to the source. So
Yeah,
exactly.
Yeah. And on that one, Harrison, is what is the difference if someone? I know my friend.
your friend.
My friend, yes,
a friend of mine. Yeah, I always get this one.
No, it's actually a friend.
friends.
Nick is
Oh my God,
he likes to trade a lot, and that's where I thought Cozzy was going with meme coins, because he got hit with by the tax man on them ones. But,
I did. That's
but at least you made profit, Cozzy.
Oh well, I don't mind paying that.
What's the incentive if you're a cryptocurrency trader and you're trading between tokens a lot? Because a lot of people actually didn't realize. I think more people realize now. I remember 17. A guy in America was trading coins to coins and swapping them over. Then it come to tax time, and the bull market had wind down, and he had this humongous tax debt, and he didn't have the money to pay for it. Of course, he could have sold all his coins that he had at a loss, but different tax shares. But for a trader, are there benefits setting up, if you're trading enough, setting up a business on that side to lower those taxes compared to just being a person trading back and forth?
Absolutely. And by business, I want to broaden that a bit more. In the 3 broad ways that you can own stuff is individual, or in a partnership with, say, your husband or wife or spouse or a business partner, inside of a trust, or inside of a company. And they all have different tax outcomes. And individuals, people generally know this quite well, that the top marginal tax rate being 47%. Now, if you're a pretty successful trader and you're making over 180,000, or maybe you have income from your day job and then the trading is on the side, it's all income. It all goes into the same calculation. Paying 47% tax, gee, that's an awful lot. And you can think about simple things as going into partnership with your spouse. Say they're on a very low tax rate, say that they're not working, then you've got efficiencies that you can get there. You may be better off using a trust. A trust is flexible. You can send the income to anybody you want, including a bucket company. So say, very common strategy with successful traders that I've assisted is you put them in a company. The two, husband and wife, they'll get 120,000 each as part of their distributions or as part of their salary, and the rest goes to a company over on the side, so that their tax rate doesn't really go above 25%. That's pretty good tax planning. If you're super serious, got to make a lot of money, want to have pretty efficient turnover, you may want to do it just inside the company. because you get rid of all that administration. You can just focus on making a profitable trading business. Now, if you make profit, flat 25% tax rate plus access to franking credits. And I don't want to go through franking credits, but effectively, you can use franking credits yourself once you pay a dividend to offset your own tax if you're strategic about it. And company structures are excellent tools. They're one of the main tools that tax specialists use in planning to make sure that you're not paying above 25%. If you're paying above 25% and you've got significant income, then you can get really good efficiencies. Downside being losses in a company or a trust, you can't claim them against your own income. But I'm also seeing the ATO questioning people saying that they made heavy losses in 2022, 2023, and they're really questioning whether they're a professional trader in business. And they say, no, those are capital losses. You can't use against your income. And this happened years ago with the GFC. Everyone was a share trader in 2009. Everyone was a share trader. So they could claim big losses against their income. So the ATO has been cluey about that for quite a while. And, you know, it's relatively dreary economic times right now, and the ATO is going to be going for the jugular on people saying that kind of thing.
And I think that's a really good point. I think there were quite a few things actually. During that tax time, from 1st of July, there were so many, like I'm talking about so many videos on TikTok, on Insta, on everywhere, right?
Yep.
And the strange thing is, like, you have the American, people putting that content, and we have people like yourself putting content, and like, okay, you can just sell before the 1st of July, and you can buy back after the 1st of July, and all that stuff. And I saw your video, and I'm like, actually, I more resonate with you, what you're saying, than anything else. And I'm like, yeah, I'd much rather be safe than sorry. How does that play out? Like in the US, it's a big thing about before the tax time and then doing the other way around. So how does that work in Australia? Like,
So
is it even a thing?
The term for it is wash sale, and tax officers across the world don't like it because, say I've got my Bitcoin's gone up $100 and my Ethereum's gone down $100. What I might do is I might sell both, buy them back, and I've got no capital gain to declare. But then I've still got I've got a better cost base. So if that BTC goes up a bit more, I can sell it, claim all my profits, and move along. It basically means that you haven't changed your economic exposure because you own the same assets, but you've been able to claim potentially losses or something, another kind of benefit. In America, they've got specific rules about this stuff. I think it's a 30-day rule. It might be 45, but I think it's 30-day wash sale rule, where they can't call it a wash if it's 31 days. In Australia, we have no such rules. And in Australia, we have something called the General Anti-Avoidance Rule, which is a very big stick that the ATO has. And if you do a scheme for the dominant purpose of getting a tax benefit, then they could whack you over the head with it. The trouble is the ATO would have to audit you, make that decision, and then whack you over the head. It's a very manual kind of way for it to work. But the ATO has put a ruling out there, and it's there to scare us, effectively, saying if you do a wash sale, we will come and whack you over the head. And we all understand that means we shouldn't do wash sales. But if someone says, is that against the law? I say, no, there are no rules about it. But the ATO has said they will do this if they catch you. But technically, there's no law about wash sales in this country. And there really should have been one probably about 40 years ago. But I don't know why we never got it. Yeah, it just never came on, because you can wash with shares. You can do it with property even. You can do it with your own business. You can do it with crypto. You can do it with anything. So it's not a crypto issue. It's just a general investment issue.
It's a general thing. Yeah. And I wonder why it was not, never made into a law or anything like that.
I think they forgot.
Maybe the lawmakers take advantage of it.
Maybe they do. I like the phrase, don't attribute to malice what can be attributed to stupidity. And I think about that all the time when stuff doesn't make sense.
Yeah.
So, go ahead, Charlie. You want to say something?
Yeah. I have a question. Because with DeFi spawning up over the last 2 years, and you've got liquidity pools everywhere.
Can I ask a question before you
Yep,
go to that
you
one?
go for it.
Because what I want to do is I want to ask Harrison. We make sense that okay, we are tax lawyer, and you're in that space. Now, how did you end up in the crypto space? Because then that will lead into the that will be really. I just want to know, like, not everyone just turn, okay, I'm going to be a crypto person today. You know what I mean? Everyone's like, it's a Ponzi scheme. So how did you end up in this world?
How I like the story starts when I was at the ATO in 2017. So I was doing private rulings for people who asked for it on, I think it was the Ethereum fork, or it might have been the Bitcoin Cash fork. I forget when the Ethereum. It was one of the forks, and that was the first exposure that I had to Bitcoin in a professional context and crypto in a professional context, and it was fascinating because everything is captured by the capital gains tax regime. It's insidious. It's everywhere. That is the catch-all in Australian taxation world. And it catches crypto generally without too much of a problem. Generally, there's still some issues there. And I was in a very specialist team at the time. We dealt with all these really complex issues, and I really enjoyed it. It was good. But then I went and did other things, and I went and did, rich people and property developers and all sorts of stuff. I was in private practice, etc. Until I think it was 2020, early 2021.
Yeah.
Someone approached me and they said, "Hey, I've made about 6 million in crypto, and I need to structure it." And he'd been to many different tax lawyers, and I said, "Look, like I know enough about what's going on here to be dangerous." And I remember saying to this guy, I was like, "Look, I need money to do this. Let's make it a fixed fee, and I'll figure it out, and we'll find a solution for you, even if it costs me money in the end. Like I'll take it as a learning experience." And he said, "Yeah, fair enough. No one else is even gonna
that's
touch
good.
it."
Yeah.
So I did it, and we found an interesting sort of solution for him, a solution which I still use for those kinds of clients. And then the referrals started coming, and then I was on TikTok, and people love talking about crypto on TikTok. So they were asking me crypto questions. So I just kept doing it. And like in summary, I got here by a complete accident. And I think you guys will say the same thing. Yeah. You shouldn't enter the crypto industry as like with the forefront of saying, I want to work in crypto, but you should instead say like, well, I'm a tax lawyer or I'm a software engineer or whatever. Get those general skills. And I say this to a lot of lawyers who think it's very sexy, and frankly it is. It's a lot of fun. But I go, you don't want to go into crypto law. You want to go into tax law or IP law or financial services or whatever. You need those broad skills to bring to a very complex problem. You don't start with the complex problem. You don't flip to the back of the math book. You start with the easy ones. And you got to have that there before you can really be very useful. And I was very lucky that I was useful enough when crypto was booming in 2021 that I could really just jump into it.
Yeah. No, good times. All right, Charlie,
now
I think
better times.
Bring back the good old days.
Good old days, right? Man, oh man. I got out of 2018 and then got back in 2021. So
it's just better when things go up only, I say.
It was easy. Everyone's making money, charging fees, saving people hundreds of thousands. I'm like, this is great. And then when it got a bit harder, I was like, oh, I've got to work a bit harder now. But the good times will be back, boys.
That's it. So my question, Harrison, is I actually haven't got myself around all of how the taxation on this is, or looked into it actually. But we've got DeFi now. It's a lot more prominent. A lot more people that 2020, no one knew what a MetaMask wallet was. A lot of them knew like Binance or CoinSpot, and then suddenly OpenSea blew up and everybody had a MetaMask wallet, self-custodial. Then they're plugging into Uniswap, and I was like, hang on, what's going on? There's all these just people that are just doing it now. Like this was like, voodoo magic before that. Like what's going on? It was a good surprise. It was good. But how does the taxation work with you provide liquidity to a liquidity pool, you've got your funds locked, whatever they might be, and then you're getting a percentage off every transaction, depending on what percentage you own in that pool and what the fees are. And then also just like straight staking, where you're just locking your tokens up to earn a reward. How does the Australian tax system account staking and liquidity pools? And is it much like dividends, or?
The problem with looking at the past and trying to find comparables is that none exist. Like, tell me an asset where I can, I can't own a share of BHP and put it into BlackRock and they use it for their market making activities. Like that's not possible for us as retail users. Now, BlackRock can do it.
Yeah.
And they've got very complex rules how they deal with that. But that's because they're big, not because of what they're doing. So we've got to go back to basics. And the basics are, if I own an asset, whether it's ETH, whether it's a share, whether it's a real property, and there's a change of beneficial ownership. And that means, do I have the benefit of this crypto? Is it really mine? And I want to start with smart contracts generally. So this is staking, this is bridging, this is wrapping, this is doing whatever it is that you're doing. Putting it into a smart contract means transferring it to another wallet. And my lay programming stuff understanding is that this is another wallet which has a program plugged into it which will do things. And back in 2021, people would essentially get rugged because they'd put the stuff in, they'd turn off the program and take out the money, take out the crypto, and it was that easy. The argument being that when you transfer it from your wallet to another wallet, do I have beneficial ownership of that anymore? Is that mine?
No.
The easy answer is it depends on the smart contract, but in a lot of cases, the answer is no, you don't have beneficial ownership. It's gone. It's someone else has it, and they're giving you sort of interest for it. The other side is, well, it's still my ETH or my whatever, but they're just holding it for me, and in exchange for this, they're going to do something with it, and I'm going to get a staking reward. Talking about something like Lido or Rocket Pool.
Yeah.
And it's really not clear where that's going to fall. It's really not clear. There's no document, there's no legal document in place of, this is a bare trust or this is a nominee. And the ATO likes to see that stuff in cases, but that's not how DeFi operates. We don't use real contracts. We use smart contracts, which they aren't really contracts. They're more like, they're just programs, and we call them contracts because it's cool. But it doesn't infer a, legal and equitable relationship. It doesn't do that. It just does actions. So there's a lot of complexity. And that's just on that one question. But on that will inform, like a liquidity pool, my knowledge essentially stops at Uniswap V2 because V3 was just weird. So talking Uniswap V2, where you got to put 2 tokens in equally weighted, that's a smart contract. First of all, is that already a disposal? Well, yeah, it probably is, because you get back something else, which isn't representing the 2 tokens you put in, but represents your share of the pool.
Yeah.
And you would then stake that LP token potentially as another disposal. Not that it's super relevant, because you probably just got it and put it in. But like theoretically, you can transact in LP tokens. It's just really weird to do that. So nobody really does. So there is at least one disposal when you do that, frankly, because I'm getting rid of, 1 ETH, 1 Bitcoin wrapped on ETH, assuming they're the same price, which means ETH is going to go up to 30K, clearly. And you put it in, and then you've got something else. It's not just 1 Bitcoin, 1 ETH put together. It's something else. Because if those values change, you get impermanent loss. And I won't purport to know enough of what that is, but I know that values change and things happen, and it's bad. So you've clearly got another asset. So there must have been a change of beneficial ownership, because you don't have the stuff anymore. It's going to rebalance in the pool, and there's no way to keep track of, my ETH here is still there. The last problem I'm going to raise with you, I will keep it brief, is fungible tokens. Is if I put 32 ETH in, if I put just 100 ETH somewhere, and it's in a big smart contract with a 10 million ETH in there, there's no and you guys would know this from being forensic investigators is a cool word. You've probably got another name for it, but you can't pick out your 100 ETH.
Nope.
It's just
No,
the count that goes up, and you could be here, you could be this bit, you could
That's
be this
right.
bit, and then when it goes down, you don't know where yours has gone. You've got to do the process. So when it's all pooled, another argument is you also can't have beneficial ownership because you can't point and say that's mine. You just go, mine's in there. And this happens with cash, the same issue. However, 1 AUD is always 1 AUD, so there's never a capital gain on it. But for us, 1 ETH equals 1 AUD, and then tomorrow 1 ETH equals 100 AUD, and then we've got a problem.
Then we got a problem. Yes.
Yeah.
100%. I think that's really important. I think what we also, in this is where Craig used to say, like, you got to, I mean, that's the whole point of liquidity pool is like, you got the pool, you just pour some water from a cup, and you tell that person, okay, now I want the exact cup of water from the other side, from the pool.
Yeah.
It's not possible. It's not possible. And and I think that's this liquidity pool, and I think the DeFi space really, it's a whole new way of finance, right? And
yes,
there's like people who are like already trading crypto doesn't really understand how the tech really works inside. They're like, okay, I'm going for more rewards. I can get more rewards by staking, or as you said, or locking in, whatever that looks like. And then we have the tax office who are even moving slowly because it's they want to make sure they're abide by the rules, right, in the guideline. They can't just do like the robocall thing. We know how that ended up in, right?
Yes.
So, and I'm pretty sure that they don't want to do the same mistake, so they're like a little bit behind. But I don't think they will be behind for too long, given that how they are improving their tech with AI and everything else. So I would say to everyone, even though you do these, DeFi aspect, trading, I think it's always best to be safe than sorry. Don't think like, oh,
Be
who
prepared.
knows? Be prepared, and I think
be prepared. Keep good records. That's all you can do. Seek advice. The problem with that last one is there are very few accountants and lawyers that are qualified to deal with this, and there's no formal qualification. Anyone can rock up and say I'm a crypto specialist. Whether they are or not is a whole different question.
Yeah,
which means that even like the 10, 20, maybe 30 accountants that I know that can deal with this stuff well, first of all, are in very high demand, can't service people, get relatively expensive because supply demand, that's just how it goes. Not everyone is going to be able to access it, either from an accessibility or just a cost. So they need to know enough to. And my best advice to people is, look, so many things are uncertain, but to at least be consistent.
Yeah.
If you're going to treat staking as not a disposal event, then always treat it that way. And if guidance comes out later, so be it. The ATO is working on some guidance for their website. That's been announced for a while. It's getting pushed back, unfortunately, but it always comes through.
Yeah.
But if people who are waiting for Labor government to change the tax law, make it all work, they're going to be very disappointed because they can't even get the tax law right the first time, let alone write it for this technology they don't know much about. So the rules are here to stay. Get comfortable with the risk. That's kind of what you signed up for. And just at least be consistent and get professional advice.
I think that's super important.
Yeah.
So you want to say something, Charlie?
No, I was just going to say, always seek professional advice.
I think that's
Harrison.
super important. Yeah. And I heard this new token going to get released. This thing called CBDCs, and I'm going to go into the ICO on that one.
It's got a moon, boys. Absolutely.
Right?
Well, it was actually funny, like seeing the use cases. It's because me and you were talking, and I was like, CBDC, like, I'm not for it. My crypto deegan's like, programmable money, like, it sounds all right now, but if an evil dictator gets in and he's got that much control and change, it gets dangerous very quickly. But one thing we were talking about was how good, though. I used to run my own business. Kozzy, you've run a couple of businesses as well in your time, where GST, automatic GST payments. Like I don't need to hold that money. I don't need to do the accounting for the tax department and not get paid for it. And it just automatically goes out without me thinking about it. And that was one of the use cases.
And that's one of the pilots programs that's been run by the the Reserve Bank, the DFRCC.
Yeah, which will be great for all those tradies out there.
Yes, I'm familiar with the construction one, and I believe it's not centralized. I know those boys well. Hedera, a few others. I think Freehills is involved. Excellent use case. And Fireblocks, yes. It's would the CBDC has a lot of capability for good, and I get the concerns, and I'm not really for or against it. I'm just a lawyer. I will just fight about stuff for money. So
at least you're honest about it.
It's the world's second oldest profession. Let's say that. And like CBDC, if it's going to stop me having a GST debt because I lodge quarterly and then the ATO says you owe 30K and I'm unorganized, I don't always keep the money aside, and then I've got to find it and pay it and, get rid of the interest, then it's a net good for everybody because we've got to pay our taxes. That there's no way around that unless you want to leave the country and never come back, then fine. But if you're going to be in the system, and we have the opportunity to make things more efficient, both for regulators to make them cheaper to run, because the ATO chews $4 billion a year is their annual budget, approximately, last time I checked, and means you have less administration to do. All you've got to do is say, here's my purchases and claim the refund for the GST credits. Well, that sounds way better. The construction one, I believe, wasn't just GST, I think. I think it was also any construction payment. Like we pay more for tradies because they know in 25% of their jobs they're not going to get paid.
Yes.
Yeah.
And I think that's go ahead.
If they knew they were going to get paid, then like it instantly becomes a more competitive market, and it becomes those tradies want to work with those businesses and entities that are using this service. So it makes a lot of sense. It's really low-hanging fruit, and particularly because building and construction, despite even ignoring the recent insolvencies, is responsible for 25% of Australia's uncollected tax debt. Huge industry for disruption. Make it easy to pay their tax. Make it easy for them to get paid, and then it'll be fine.
Yeah.
No, I think that's and I see that CBDC working at wholesale level. It makes a lot of sense.
Yeah.
Wholesale. I agree.
Yeah. And my concern is like when it comes to retail, that's where mums and pops who got certain difficulties. I mean, this morning I tweeted about the Brazilian CBDC. So one of the developers reverse engineered the smart contract, and it says you can pull the money back. So they did program some logic.
They put it in there.
They put it in there. So I think
which could be good for everyone that gets scammed
or drug money
with online or whatever that is,
the illegal money, whatever that looks like. There are all these different ways that people scams and all that. When someone scams, guess what? They'll be able to withdraw those and come back to the right owner.
Yeah, I was a while ago. We were talking about maybe a month that's like 6 months in crypto blockchain world. But they've done Harrison, did you hear about the Europe stable coin?
I had some murmurings about it. What do you think about?
They had programmed, they made this stablecoin currency. I think off the top of my head, it was with banks or government, something like that as a trial. But on every transaction, they still needed someone to accept that transaction. If I go transfer $50,000 in a bank, they have a check there.
God.
They had put that in the smart contract, so it was actually slower.
Oh my God, that's just
the actual system.
Seriously. I mean, just saying, we got all this technology, and then we are making it even slower. Our mate Gary did say that we already have digital currency, and why do we need another currency? And I think I have a feeling we got crypto, So why do we need CBDCs? I think that's what he was talking about, isn't it?
Gary Ginza,
Yeah.
was it?
I don't know. I'm just joking. I think he meant like, why do we need crypto when we got like dollars? We already a
Yeah,
digital
well,
currency.
he's a US dollar maxi, I
Yeah. He's
assume.
a US dollar maxi.
Like
Yeah.
all the US government shills, but
Yeah.
they're like it can be done well. And this isn't spoken about a lot, but I think the most exciting thing, I think it was the World Bank is intending on using DLT and blockchain for their like world currency unit. Like,
Yeah.
imagine not having to deal in bloody US dollars and have to deal with the exchange rate. If I'm dealing with a supplier in Singapore or Dubai or wherever, I can use a world currency unit or whatever they're going to call it to at least to manage the normality, and I can hedge my economic risk against everything. So I can, instead of holding 18 different currencies, if I'm a large business, I can receive one. It also means that FX swaps could be more efficient. I don't know that technology well enough, but there's super interesting use cases of it that isn't doom and gloom. Government's going to steal the money out of my bank account, which for the record, they can do now anyway. They can freeze your account and garnish it without much second thought. What, you think the bank's going to fight them for you? No, they're not. Like, most of those powers are there. It's I think people feel protected by the complexity of the banking system, in that it's hard for the government to do that. But it's not really a good sort of moat, in my opinion.
I guess when you think about like physical money, I think then you got that opportunity to spend however you want it, where you want it, when you want it, right? I think with the digital thing, I think you just can't. I mean,
even at the moment, like most of in Australia, I think it's like 80-90% of it is a digital ledger.
Yeah.
Like, and within the bank, it's digital. We all went to the bank tomorrow. It's just a number, not actually physical.
Not physical, right? So,
but the other funny one I seen, actually, I was listening on the way home from work yesterday, was the Ivor on Tech episode. And it was Janet Yellen. And she was like, this money, see the one with my signature? We'll share it afterwards. Yeah. And it's like, this is your money. We're letting you choose the color. And like all the people are like, all the Bitcoin maxis and stuff are like, oh, it's our currency. We can vote on the color. Like, but yeah, watching it was quite funny.
I mean, like when you think about that, even like for charities, places like that really works well, because you got the full transparency of all the transactions. I think there are places that you can, and like you said, Harrison, like about the one like sort of currency, global currency. What do you call it, Charlie?
The GAD.
Yeah, the GAD.
Global average dollar.
Yeah, so Charlie had this idea called global average dollar.
Everyone, we'll see it built and spun up next week now, because
it doesn't sound that hard to do. I think the World Bank one was just top 20 economies, balance it by size and hold the currencies there, rebalance it every hour, and then tokenize it. I'm like, that sounds fine. It doesn't sound so hard. The difficulty is getting people to use it. The whole economics of it is something well beyond my expertise.
Yeah.
I think so. I have a feeling, like you said, I think having that is almost like you put that into the liquidity pool and you got like the synthetic token, isn't it? Really?
Yeah. You can
in a global manner. So so I mean, like that's really cool. So if we just go to the next part of this, is I just want to pretty much the final part I want to touch base is the DAOs. So in our space, we have these things called DAOs, which are decentralized autonomous organizations, and they're still kind of organizations, but they're decentralized and they're automated because of the smart contracts. So, and we have come across a few, I would say in the past, maybe not in 2 years, but in the last year, when the bull market around that time, people were really using those company as a structure, a DAO as a structure, when it comes, especially in the investment side of things, at the VCs, and so how does that really the tax, when it comes to tax time, how does it impact these DAOs, and are they even legal according to the AT, or do they recognize them as it's a company?
from the ATO's perspective, they've never said anything to me. Look, they can't even get whether staking is a CGT event, right? They aren't really equipped to deal with this. And in terms of people that I've spoken to, the ATO's never got to it yet. They've got to get the basic, you know, go walk before they run. But in terms of what they actually are, there are DAOs with no legal personality. And what that means is that it's just a bunch of people doing stuff together. And that can generally either be a partnership or it can be an unincorporated association. The association being the not-for-profit variant, the partnership being the for-profit variant. And there's a bit more to it than that. But DAOs without structures, that's generally where they fall. And say you're a for-profit DAO, say the DAO makes some money. How partnerships work in Australia and in most countries, I think most countries, is that you as a partner pay tax on your share of the income, even if you don't have it. If it made $100 and you're one of 100 partners and it's equal, you should pay tax on $1. Now, people aren't going to be doing that. People in DAOs with no legal personality aren't going to go, what's the income this year? I'll put it on my tax return. We haven't got to that point yet. Maybe they should. We'll leave that for another day. But the other side is a lot of DAOs do these days have personalities. They have companies. They have what we call orphan structures. And orphan structures have no shareholders. So this could be something like a discretionary trust would be an example of an orphan structure. Generally, it's got someone that controls it. And the person who controls it can benefit whoever they like under the terms of the deed. But for DAOs, they don't generally use Australian discretionary trusts. They use Seychelles foundations, Cayman's foundations, Swiss foundations, trusts in Guernsey, more tropical places like Panama and Marshall Islands, because you can't run DAOs with legal personality in an Aussie company because you've got to have a shareholder. The US has some solutions with their DAO LLCs, but frankly, I can't see many circumstances when I could tell a client with a straight face, America is a great place to put your DAO. Like, why would you subject yourself to that if you didn't have to? So elsewhere in the world, there are a few options. The Marshall Islands is one. They're having like a DAO company. Like it's getting more mature, but it will take a very, very much longer time. And DAOs need to get a whole lot bigger before we can really get there. But for the time being, the best wrappers, in my opinions, are foundations. So foundations are like not-for-profit entities that run the DAO and they can benefit the token holders. And the ATO don't even know how foundations are taxed. We don't even know. And these have been around for hundreds of years. We're catching up. Crypto's on the list, but it's very far down the list.
Yeah. And I think I seen the birth of DAOs, and not answering this for everyone, but in my opinion, I seen DAOs getting spun up because they could class them as a utility token. No, it's a utility token. People can vote on certain aspects. It's not a security.
Yeah.
There's sort of, there was a bit of a narrative for there as well.
Yes.
Whether it's true or not, I don't know. It's just what I seen and what I thought. But Harrison, I'd like to ask the Bitcoin. With Bitcoin, it's capital gains. It's classed as a commodity asset. But we've got countries in the world, El Salvador, that have classed Bitcoin now as legal tender within their country. So it's now a currency within certain countries. I think there was another Brazil, maybe. There's a few spinning up. What at the moment Australia classes it as capital gains tax. What are the benefits to an investor, a user, if those laws were to change and Australia was to recognize Bitcoin as a currency? Is there any benefits in that?
No, and I'll tell you why. Because first of all, there is only one ruling out there, and it covers Bitcoin, and it says it's not a foreign currency. And the reason for that is because it's not the sovereign currency of any nation when they wrote it, and that's clearly changed. So I've spoken to the ATO about this, and I said, hey, this ruling's wrong. And they said, yeah, we know it's wrong, but that's still what we're going to do. Okay. Government is in the process of changing the law now. There was a bill, I don't think it passed, but it was going to amend a bunch of things about foreign currency in GST and in income tax. And it will probably plug that hole up quite well. But a lot of what my job is optimizing people to claim the CGT discount. And the CGT discount being you can reduce your capital gain by 50% if you've held it for 12 months. With crypto, and specifically, let's just use Bitcoin as an example, if you wanted to say that it's foreign currency, it's still under CGT, but it's also under the Forex regime. And the Forex regime, frankly, I don't have a good handle on because we try and avoid it. But there's definitely no Forex 50% CGT discount. You've instead got realization events. You've got limits of FX that you can have that isn't taxed, which may be what people want. But that $250,000 limit kind of runs out pretty quick. Maybe not for some people, but the bigger you get, you're going to run out of it. And then you're stuck in this bizarre FX regime. It's not a good place for it.
Yep.
It's better places with capital gains tax. And I might also raise that we don't even know if capital gains tax really applies. Again, there's an ATO ruling saying Bitcoin is a CGT asset. CGT asset means it has to be property of some kind. And you have seen there's been a few cases. I think the latest one that came down was in Hong Kong, where Hong Kong said, yes, it is property for some reasons. The UK has had to create a whole new class of property because Bitcoin didn't fit into it, yet it's valuable. And the court made that decision. So the ATO is saying it's property, and the reasoning is, frankly, not great. Maybe they needed to take a case to court to clarify that, but they didn't do that. They've decided to put a ruling out instead. So if somebody's got the money and they want to pay me to fight it to the High Court that Bitcoin isn't property, then let's do it. Money up front, please.
Not in tokens.
No, yeah, I'll take Bitcoin, which I'll sell immediately. It's very uneasy, but like it's very unlikely that anything outside of Bitcoin is foreign currency anyway. Even something like USDC, even though it's essentially tokenized US dollars, doesn't matter. It's not foreign currency. It doesn't qualify. Only Bitcoin in the class would qualify. CBDCs would qualify as well, because they'd be issued under the Currency Act and stuff like that. Yeah, that's not really controversial. But we want it in capital gains tax anyway, because when I make my big Bitcoin gains, I want to pay half the amount of tax. Yeah. And it's as simple as that. We don't want FX. That'd be terrible.
Got it. Interesting.
It is. I got a few more questions, but I think we are coming to that 1 hour mark now. And it's always like this, right? We always think oh my God, we got all these questions to ask.
Never
and
enough time. With tax, there's never enough.
It's never enough. It's always like that, and then come to the point that 1 hour mark. And Harrison, if we ask what's your advice for anyone who's, I would say, let's ask the advice for, because this is in the Web3 Weekly podcast. What is your advice for anyone in the crypto space who's trading in crypto? What is your advice to the community?
My genuine advice is you need to stay up to date with how it's changing, because it is changing. Regulation, it's in the papers, it's very big and shiny, and everyone's saying, is it a security? For everyone that is just a retail trader, we don't care about that. That is not relevant. That's relevant to CBA and BlackRock and the exchanges. Doesn't affect whether we're going to buy and sell it, because we can do that on chain. The thing that you should take away is that the way the government regulates, especially in Australia, their biggest lever, which they use a lot, is taxation. So how that changes, you need to stay on top of that. And I know we're out of time, but I want to say this anecdote anyway, because you gentlemen are in Queensland. So this will hit home for you. The rise of 4X beer was entirely essentially a psyop by the Australian government by giving them massive discounts on their excise, on their taxes, so that you could manufacture mid-strength beer for a whole lot less. So Australians started buying it. The whole idea is Australians were drinking too much. This is that big lever. And they pulled it and they got the outcome. If they said Bitcoin is taxed at 100%, like that's a big lever. They're not going to do that.
Yeah.
What they want to do, and all I'm campaigning for government to do, is to make it make sense with, shares and property. So it's not treated worse, treated the same is all it is. So my advice, I haven't got to it yet, is you need to follow people that have their finger on the pulse, i.e. me, i.e. people should follow me on social media. And I say that genuinely because I really do have a finger on the pulse. And if something changes, you're going to be the first to know.
Oh, awesome.
Yep.
No.
And with that one, Harrison, where can people find you online and your socials, websites?
People can find me. My law firm's website is cadenalegal.com.au. I'm on TikTok as well, Harry Dell Tax Talk. I'm on Twitter. I don't really get Twitter. I go on there. I'm trying. I'll get there one day. I'm on LinkedIn. Please don't find me on Facebook. Jesus. I'm on Instagram as well. I'm on Threads now too, but I haven't really done that either because it's just Twitter but harder. I'm kind of everywhere. If you look me up, you'll find me. So don't feel shy about jumping into the comment section and asking an intelligent question so I can ridicule you. No, so I can answer it. I only sometimes ridicule people. Only sometimes, but genuinely, I'm relatively easy to find. I hopefully post some helpful stuff sometimes, and I'll answer your questions. I won't even charge people for the odd comment that I look at.
That's great. Because you can't have not enough tax, right? And given it's constantly changing, evolving based on so many different aspects, crypto is I think the growth has been exponential, so you don't know when and where these going to show up. So it's super important to follow people in the industry, whether sometimes you agree with them, sometimes you don't agree with them, but still be in the lookout, and at least be open to listen to other people who are in that space. And there is no, I think, until the government, as you said, until the government come back with solid regulatory laws and everything else, and the token mapping, all that stuff, until they come to it, you have to do the right thing and listen to always seek advice.
Yeah, always seek advice. You don't know what you don't know. It's as simple as that.
Yeah. Awesome. On that massive session, thank you so much, Harrison, again for joining us and agreeing to do the podcast. And we heard massive amount of good things about you, and you are even
it's all lies. All those bribes are paying off clearly.
I don't know about that, but I think I start trusting you because you said now you're coming down to the the coast, so it's always good to have someone smart as you in Queensland.
I'll be lowering the average IQ. Let's put it that way.
I'm not too sure about that. So again, it's so nice to have you, mate, and thank you for everyone. Thank you everyone for who joined us today for our podcast, and I hope everyone who tuned in learned something a little bit more interesting, given this tax time and with crypto and how that crypto really start getting embedded into our daily lives. I think it's super important to start having this type of conversation. So on that note, everyone, thank you so much, and we'll catch you next week.
Thanks, you later, guys. See you, Harrison.
Thank you, gents.
Thanks for tuning in. We'll see you next week. Same time, same place.
Subscribe.